purpose of Division 35 is to quarantine tax losses from non-commercial business activities in order to prevent non-commercial activities from being subsidised by deducting losses against an individual's other income. As such, in accordance with Division 35, losses from non-commercial business activities are to be carried forward and deducted against any future income from that activity. Sally is a partner in an accounting firm and has adjusted taxable income of $300,000 from this activity. During the year, Sally also conducted a business of buying and selling textbooks on eBay. Her turnover each year from trading is $25,000 and she made losses in the past 4 years and in the current tax year. Sally operates the trading business from a home office and the property is valued at $500,000. We should note at this point that the provision applies to individuals conducting a business, either as a sole trader or a partner, and does not apply to passive investment income nor a hobby. So assuming Sally is conducting a business, we now need to apply the commerciality tests per section 35-10 to determine whether Division 35 applies or if Sally can deduct her losses from her other assessable income. If Sally's adjusted taxable income is less than $250,000 and she passes any one of the 4 tests, then she does not have to defer her losses. Sally's adjusted taxable income exceeds $250,000 and therefore she cannot rely upon any of the 4 tests and cannot deduct the trading losses from her eBay business from her net partnership income. However, it is worth noting that the Commissioner can exercise discretion in accordance with Section 35-55 if the Commissioner is satisfied that the application of Division 35 would be unreasonable. If this occurred, then Sally could deduct these trading losses. Now let's consider what would happen if in the next year Sally reduces her working hours at the accounting firm. Her adjusted taxable income, not including her trading losses, falls to $220,000 and her trading turnover from her eBay business is $32,000. Now, because her adjusted taxable income is less than $250,000, we can consider whether she passes any one of the 4 commerciality tests. The assessable income test is set out in Section 35-30 and requires that assessable income from the business activity, including capital gains and balancing adjustments, is at least $20,000. With an assessable income from the business of $32,000, Sally passes this test. Therefore, she can deduct any trading losses for the year and also her carry forward losses that were quarantined in previous years, up to the amount of her taxable income for this year. Although we know that Sally has passed at least one of the commerciality tests, let's look at the other 3 tests anyway. The profits test per Section 35-35 requires that the business activity resulted in profits in at least 3 of the past 5 years, including the current year. Sally's business has been making losses, so would fail this test. The real property test per Section 35-40 requires that the real property or interests in real property used in carrying on the business has a total produced cost base of $500,000 or more. It is important to note that this excludes a dwelling and its adjacent land that is mainly used for private purposes. Sally runs her business from her private home, and therefore, although the value of the property is $500,000, she fails this test. The other assets test set out in Section 35-45 requires that depreciating assets, trading stock, leased assets and intellectual property of the business are valued at least $100,000. We need to remember that this excludes land or real property interests accounted for under the real property test and also excludes cars, motorcycles or similar vehicles. As Sally runs this business from home using eBay, we can assume that the other assets are not valued at greater than $100,000, and she also fails this test. To recap, Division 35 is in place to prevent non-commercial business losses from being deducted from unrelated assessable income. Losses can be carried forward and deducted from any related business assessable income earned in the future.